Banks on the verge of collapse, cryptocurrencies going down, FTX scandal, rising interest rates, and expected monetary tightening. These days are not a great time to be bearish or optimistic about the future of cryptos. Or is it? Today, the founder and CEO of ARK Investments, Cathie is sharing her insights about the outlook of the US economy. She is, however, still bearing about the crypto industry and shares her unique insights into why the recent bank runs got nothing to do with crypto. She also analyzes the proposed monetary and tax policies and shares her ideas about how the fiscal policy of the government and the Fed decisions can influence the crypto market.
We're beginning to see brewing here a banking crisis. And the question we have to answer, is this going to become systemic like Lehman Brothers in 08 or 09? Or, and we're betting on this latter one here, is this more like 1994 when Orange County went broke, and that created a crisis to which the Fed responded? We think it's much more like 1994 because the setup was similar. In 93, 94, commodity prices had taken off as we were coming out of that recession. It was an S&L-induced recession, so housing. And the Fed was railing against those price increases with higher interest rates. It was a terrible year for growth stocks, and that's how we would characterize 2022. But when Orange County went bust, that was a sign that the Fed had gone too far, and the Fed did change its spots. We believe that the failure of Silvergate Bank and Silicon Valley Bank, which just the FDIC put it into receivership today, both of those are telling us a couple of things. One, that, the Fed has gone pretty far and is causing a lot of banks, not just these, difficulties, and I'll describe how in a moment.
It is often said that those who did not learn the lessons of history are doomed to repeat them, and Cathie makes a similar point here. What's happening today in the banking industry and the stock market has a glaring resemblance to what happened in the markets back in 1994. The question Cathie asks is perhaps the most important question that we all are wondering about. Is this banking crisis going to spread and take the entire economy down with it, like the Lehman Brothers back in 2008? And the way Cathie sees it, it is not. According to her, the crisis looks somewhat similar to the infamous Orange County failure back in 1994. Here's a quick look at the Orange County failure if you're not familiar with it. Back in 94, Orange County, one of the most prosperous districts in the US and California, went bankrupt after sustaining heavy losses of over $1.6 billion. It became the largest municipality in US history to go bankrupt at that time. The mismanaged public borrowing, along with the high-risk investment bets in its portfolio, was the main culprit. Now coming back to our topic, the banking crisis we see today has many similarities with the savings and loans crisis of the 1990s. Pretty much like today, back then we were coming out of a recession, commodity prices had taken off, and the Federal Reserve was hiking the interest rates to curb price increases. And that's exactly what was happening in the last year, 2022.
We do agree with those who say, well, Silvergate had a concentration of crypto customers, and Silicon Valley Bank had a high concentration of venture and venture-related customers. And so that's all true. But if you look at what has happened here, it is the deposit outflows that have triggered the problem, the crisis. We know that venture capital is facing a bit of a liquidity squeeze. Fewer deals are being done. There is more risk aversion in the marketplace. And so these companies are having to draw down their deposits. Most bank with Silicon Valley Bank. They're drawing down their deposits because they have to.
Cathie goes on to explain that the recent bank runs are not a sign of another crypto crisis like the mainstream media portrays it. Rather, it's a matter of deposit outflows that have affected the operations of these banks. Of course, Silvergate Bank has a higher concentration of crypto clients and has been a major funder of the crypto industry for some time now. Silicon Valley Bank, on the other hand, has a higher concentration of venture-related clients. The venture capital sector is experiencing a liquidity squeeze at the moment since fewer deals are being made and there's risk aversion in the market. But both banks went into trouble because of a deposit outflow that came out of nowhere suddenly, and not because of any crypto-related problem. So here's the question. What led to this unusual and sudden deposit outflow? What could have been the reason? Cathy discusses it here.
So this is nothing to do with crypto. In fact, Silicon Valley Bank, I don't think you're going to see a mention of crypto at all there. So it has nothing to do with crypto, but it does have something to do with what happens during banking crises usually. These banks are upside down. They start losing deposits. In the case of Silvergate and Silicon Valley Bank, there's a run on the bank. When you get Peter Thiel and other famous investors and well-respected investors saying, get your money out of there, they're going to take the money and run. And so this is nothing to do with crypto. This has everything to do with Fed policy, we believe, taking interest rates up so dramatically, the most rapid rate in history, and taking money growth down from 27% 2 years ago to -3. So that's a 30 percentage point swing. That has never happened. We've gone back to the Great Depression to see if that was the case back then as well. It wasn't.
What we're seeing today is something that usually happens during any banking crisis, and there are two main reasons, as Cathy points out. Number one is the unprecedented Fed interest rate hikes. It's been the most aggressive interest rate hike since 1994 and has taken money growth down from 27% 2 years ago to -3%. Such an unprecedented swing in the money supply of over 30% within such a short period tends to send the banking sector into turmoil. The second reason for this bank run panic was the fear-mongering done by famous investors like Peter Thiel. When famous investors tell you to get your money out from the banks, of course, it'll spread mass panic attacks among the public and result in banking runs like these. However, one thing is certain, cryptocurrency has got nothing to do with this. Nothing at all. But as always, the mainstream narrative is all about lies. This time they use this bank crisis as another trump card to denounce crypto. What do you think about Cathy's outlook on the economy? And more importantly, do you agree with her take on the banking crisis in the crypto industry? Is the mainstream lying? Or do you think crypto has got something to do with the banking crisis? Let us know in the comments. We'd love to know. And don't forget to hit that subscribe button and stay updated on all things crypto. We'll be seeing you soon in the next one.